whenever you're ready.
Good morning. My name is Victoria.
I'm Suzanne.
And I'm John.
And we are Edge Consulting. We've been university students. We know the struggles that come with it. And we also have experienced the problems that can occur in summer jobs and co-op jobs. And that is why today we are so excited to work with Ribbon on this new adventure of really changing what we're going to do in this industry. And with that, I'll let Suzanne get started.
So as consultants, there are a few common patterns that we start to see with our clients, and it really has to do with the balance of tensions. And the tensions I'm referring to, as you can see above, are what you can do based on your management preferences, what you need to do based on the external environment, and what you can do based on your internal capabilities. And particularly in your case, there are some really attractive things happening in the external environment, so it's really hard not to disrupt this balance of tension because it's so attractive to go toward that external environment and see some of those opportunities. As I said earlier, this is a pattern that we've identified, so you're not alone. And we're here today to make the difficult decisions for you and really help you find that sweet spot and core of uniqueness, and then align your activities with that core, which is so important and is really going to foster sustainable growth for the company moving forward. So let's get right started. So an executive summary, just to show you sort of an overview of our entire presentation for today. The identified problem is really long-term sustainable growth. The recommendation we're going to put forth today is a strategic partnership and additional infrastructure and also a little bit of adapted market positioning. And the impact that our recommendation is going to have today is that it'll be profitable by year 5. The net income will be $44,000 by year 5. And most importantly, after year 5, really positioned well for exponential growth. So the goal today is to deepen the Ribbon strategy without broadening or compromising it. We believe in the company and the vision that you have right now. All that we need to do is really optimize the positioning and communicate the strong value proposition that you have. So moving forward, we have an agenda for today. You know where you go, you know where we're going, so let's keep the ball rolling and get straight into the nitty-gritty of things. So again, the main problem that we've identified is really how we're going to acquire this sustainable growth. In this industry in particular, because product life cycles in technological and online platforms can be really quick, sustainability is going to be really key. So main problem is that's what we've identified. Looking at some of the underlying issues that are feeding this problem, we've outlined 3. So the first being the low-cost structure. So as you know, with competitive advantage, you can acquire competitive advantage through cost leadership or through differentiation. So having a low-cost structure is part of your competitive advantage. Therefore, it's really important to adhere to this in all activities moving forward. And again, operational effectiveness, because it's a low-cost structure, is then also very, very important. Second underlying issue is the high threat of new entrants. So this is an attractive market to be in. It's a growing market. Therefore, the probability of new entrants is inevitable. So we have to keep our ear to the ground, and no competitive advantage is sustainable forever. So again, really honing back to building off of the core of uniqueness and focusing on making those difficult trade-offs to stay true to the vision of the company. The third underlying problem is the high turnover and retention possible with a business model such as this one. There's going to be a very high frequency of jobs and a lot of paperwork. When you're doing students that are going to be doing jobs that are 4 hours to 4 days, I could be doing, 7 jobs in 7 days potentially if I wanted to. And with that could come contracts with every new company, a lot of administration work, and a lot of new infrastructure could potentially be needed. So that frequency and the outdated data that could come along with that is a potential threat moving forward. So now getting a little bit further into things and going into some analysis, let's look externally. And again, this is what you need to do based on the external environment. So some of the issues or opportunities that we've identified. The first one is that there's a co-op scarcity and inefficiency. As Victoria stated, we've all been university students and we're familiar with the co-op programs. And while we were university students, we heard a lot about red tape, we heard a lot about backlog, we heard a lot about inefficiencies or bad experiences with co-ops. So this company would definitely fill a need in the market, which is really important. The second issue opportunity is there's moderate online competition right now. The market is not saturated, so you have a few big players for sure, people like LinkedIn. However, there is still huge opportunity for segmentation and for some really strong niche strategies. The third is business confidentiality. This is a potential issue moving forward when you have, as I sort of already have spoken about, people coming in at high frequency to work for your company, the information that they're exposed to, financial information, client information, all very sensitive. So something, again, that needs to be built into the structure to mitigate some risk. And the last thing, the industry life cycle is in the growth phase. So again, to reiterate, this is an attractive market to be in. So creating barriers to entry are essential, and remaining true to that core uniqueness are essential. Or you'll get eaten alive, and as soon as they go into the mature stage, you're a goner. So now moving forward to some internal analysis. Let's look at your internal capabilities and what you can do based on them. So the first is that you have 6 employees and currently 300 students growing rapidly. So keeping in mind that there's limited capacity, it's a very scalable business, which is a benefit. However, when you're working with 6 employees and potential exponential growth, definitely something to be mindful of. The second thing, strong web design and algorithms. So the strong web design is important to note because it's something that's easy to imitate. Something that's much more difficult to imitate is your algorithms. Those algorithms, however, are going to be stronger based on your customers. So in order to create a barrier to entry with those algorithms, you need to have that customer base to feature competitive advantage. The third point is strong human capital. So a really strong point for the company is the 6 employees that you do have are really capable people, obviously very passionate, and can really take this business to the next level without any help from external forces. Another point, you have a 4-hour, 4-day projects, and I've already spoken to this a little bit, so there's time-sensitive projects, high frequency, short cycles, so there's a need to process high volume quickly. So that again will have to be built into the business model. And the last point, a really strong point, you offer $175 saving for employees per job, basically. Every time that they're coming in, instead of them having to search for the resumes, do all the hiring, etc. $175, which is significant. So the value proposition for the companies, for them to pay for your service, is really strong. So the key takeaway from this internal capabilities point is that there's no competitive advantage is sustainable forever. You need to create unique activities and stay true to the value proposition. So really straddle and fail. Try to adopt what LinkedIn has, try to adopt what the other competitors had, and really focus on straddling, and you will get eaten alive. You need to stay true to your niche and your segment to be successful in this growing market. Okay, so now moving forward, we're going to go into some of the alternatives that we looked at when coming to our ultimate recommendation, and John will take you through this.
As consultants looking into your business, we're given a unique perspective of what you guys do really well, and like Suzanne was talking about before, there's tensions. So with that, we can some decision criteria that we feel best suited the strategic movement forward. This included aligning with that value proposition. You offer students a diverse access to learn different competencies in the real world, and that's huge. Book smarts don't always transfer over to the real world knowledge that we need. The second is increase those barriers to entry, as Suzanne mentioned earlier. It's a really attractive market. You got there first. We want to maintain that position and really create buy-in into this. And lastly is flexibility. Just remain flexible. Right now you're very flexible to the market changing. You've seen that students don't really want resumes, nor do organizations want to go through thousands of resumes a year. So we just want to maintain those core competencies. So our first alternative that we explored was partnering with Randstad. However, the disadvantage was you'd get that loss of control potentially if they want something out of it for this partnership. Diluted value proposition, you wouldn't be able to offer a wide range of jobs, as they would be permanent, not temporary internships per se. And lastly, it's inflexible to change. So for this reason, we rejected this alternative. Our second alternative was an acquisition or merger with another company. Ultimately, the disadvantage of this was loss of potential revenues, as you now be splitting those revenues if it was on a per sale basis or revenue basis. There would be no capitalization of the great business idea. This is a great business idea. It's proven itself already. We just got to get that buy-in and really move this to the next level. And you'd also be leaving an attractive market. We can't point that out enough that this market is growing. There's university students keep growing, and everybody's looking for that real hands-on in the workplace, not filing or photocopying. So for this reason, we rejected this alternative. And now to get on to the good stuff. Here's our recommendation for you today, and this is a partnership with university and professors. So what this entitles was going to universities, getting them to maybe potentially stray away from the co-op and the bureaucratics of such an establishment, and really going into just coming through us to get those four months of something maybe you're interested in upskill this summer and then build another on the other, and it's more flexible. So this is fast, it's diversified and easy, as mentioned earlier. It's directly linking students to their area of interest. You get to your clients specifically get to choose what they are really passionate about and then go apply those skills. So that's also buying for them. That makes a great relationship between the employee and student because the employer and student, sorry, because a happy employee is a good employee and that's a happy client for the organization. So for this reason, it aligned with all our decision criteria and we chose to accept this. And I'll just pass it on to Suzanne to go a little bit further into it.
So now that we've shown you how we came to our ultimate recommendation, let's just get into a little bit more detail to give you the whole picture here. So our recommendation, as John talked about, is to really hone in on the fast, easy, diversified, valuable experience that students can receive. And then for the companies, having access to skilled labor at a low cost. That's the real value proposition. So the ultimate vision that we see for Ripen is to focus on new graduate and undergraduates, which you already do, to focus again on that cost leadership strategy. That's a differentiator for you and definitely the cornerstone of your competitive advantage. To focus on white-collar jobs, so really focusing on business students who have a difficult time turning their intangibles into tangibles, especially now that the degrees have become diluted. So just because their degree may not have the value that it might have had 20 years ago, doesn't mean that they're not going to be a very valuable employee. So focusing again on those business students and really revolutionizing the way that we enter the workforce is how we see this company moving forward. So now to show you how we're ultimately going to implement this recommendation, Victoria is going to do that now.
Well, thank you, Suzanne. So as you see right here, we're going to do this through the partnerships with the universities, through job screening, and more personal profiles. So I'll get a little bit more into that. When you look at an implementation plan for a company, you want to know what you do right now. So I'll walk you through the first 100 days. So that's the first 3 months. And the first thing that you need to do is meet with freelance. You said you wanted to gain some knowledge of how they work with their systems. So definitely meet with them, see how they do it, get some ideas for that new 0.3 version of your website moving forward. And then next, meet with universities. So that's the major thing we want to work with. And the first universities you want to work with would be here in BC, in Vancouver, working with UBC, UBCO, UNBC, working with those top universities and getting them involved, and mostly getting the professors involved. So what that would entail is going to the universities. A lot of universities are now accepting entrepreneur as a major, and entrepreneur classes and startup business classes. These are the classes that need simulations and real-world experience. What a great opportunity for this company, and to get these projects into the classrooms and get students working on projects for the real world and going in and moving on to the real-world career experience. So the next thing would be prepare for funding. So we need funding in order to launch the new website and in order to basically move forward with the company. So we'd like to see meeting with the bank, seeing if that there's an opportunity to possibly just get a loan and having lower interest rates and lower terms than meeting with an investor and then moving into getting an investor and having options with them to possibly buy them out once the company is profitable. And finally, in that first 100 days, is begin recruiting for future employees. As Suzanne mentioned, the capacity with Regina is fairly low. You only have 6 employees, and that will need to increase in order to expand and grow the business the way that we would like to see it happen. So moving on to the short term, which is 3 months to 9 months. And the major things here is to launch that new website, and included in this would be student profile updates, where it's a lot more tailored to the student personality, so Myers-Briggs test included in that, as well as aligning the algorithm to make sure that those matches of what projects are great for that student and great for the company line up. So this would also help with the rating scale. So an exit interview for both the company and the student to make sure that it was a good fit, to make sure that we want to continue working with that student, and to make sure that the student got a great experience and didn't have to just scan all summer. So moving on to the medium term, the major thing here would be, again, do those job fairs like the company is already doing. Those are great for student engagement, but put a little bit of a spin on it. So get that marketing going and target it directly at students. Kill the resume. The resume, as you stated, is no longer the reason just to get the job. It's everything. It's a package. You want to show what you can do to the company and really show that off. So anti-resume workshops. Show them how to bundle your profile and your unique self to the company and what you can do for them. And then, of course, once you've started those connections and once you've shown students what you can do, evaluate, adapt to the changing market, adapt to what students actually want, and see how you can build those profiles even better. Moving on to the long term. So that's, again, meeting with universities, continuing that support, getting the career centers to more follow your way of job hunting and job posting rather than the old co-op jobs. And then application in the long run, this would also be a great way to grow your business, as LinkedIn has an application that just makes it easier to check your updates, add new connections, add new projects on the go. And then finally, the last campaign to continue on to a little bit longer is Break the Scanner. So have old scanners around your university and have a poster saying, who wants to scan all summer? Come to us, we'll find you a great project and find you a great career to move on. And finally, some going forward strategies. So possibly working with universities and bundling training programs into your services and getting them trained for their career for the long run. Not just the projects, but what they actually need to do, and taking that off the hands of your companies. And as you can see, there's some more going forward strategies here, but I'll pass it off to John to go into more financials.
All right, thank you. Just a brief overview. I won't spend too long on it. You already mentioned that you realized that there wasn't going to be a positive net flow of cash coming until at least 5 years. And the reason for this is that this funding, you need the funding to as it's required for the quick growth that your company is currently experiencing. We don't see a problem with attracting new projects or attracting new businesses to buy into your company. Just funding that growth to ensure that the standards and structures are in place in order to house that growth that you're going to experience. So just conservatively here we can see a 3-year and a 5-year projection, and that 5-year being at that $45,000 net income. I'll just continue on here to the risks real quick. So with any great plan, there's always some risks that come along with it. Now, one risk we see is if it's difficult to acquire that $200,000 funding. You mentioned that some angel investors, maybe family and friends. We explored maybe going to a loan instead, exploring that option. We really don't see it hard to find buying in such a growing market. However, I'll just pass it on to Suzanne now to close it up.
So although there are a few inherent risks with any major plan, really you are sitting in an excellent position on a great business idea in a growing market. All that you have to do now is prepare for the marathon and not the sprint. So that means tightening up your internal operations, making sure that you have the infrastructure in place to manage the growth, and ultimately coming away with these key outcomes that we have provided you with today. Thank you very much for your time. We'll now open the floor to any questions you may have.